It is 9:37 a.m. Pacific Daylight Time. It's the Rose Sticks Day of June 2026. That would be June the 11th, 2026. And this is episode 1339 of Bitcoin. And coming to you late today, I understand that I had to go get a brake switch replaced on my car. I've never heard of such a thing called a brake switch. But on a Chevy Traverse, apparently it will dumbly activate traction control at 75 miles an hour in dry conditions at 75 degrees Fahrenheit. And all of a sudden, traction control, for those of you who don't know what that shit is, and honestly, I think it's dumb, but it governors your engine's power and cuts it by like 70%. Because it thinks you're sliding around ice and snow and rain and shit like that. So it starts auto braking. It slams your transmission into lower gear, and then it completely throttles your engine back. Imagine doing that shit at 75 miles an hour, just minding your own business, looking at the birds flying in the sky and the sun and shit, and all of a sudden you're like, what the hell is going on? You're in traffic, there's people behind you. How is this safe? Oh, it's a safety feature. No, it's not. Not when a dirty switch, again, it's a switch on the brake. Like you pump the brake and this switch senses that you're activating your brake. And it says, you know what? I think this guy at 75 miles an hour has hit a massive patch of ice, and I'm just going to cut his throttle by 70%. You know, he may be on the highway. There may be a gravel truck doing the same speed right behind him. We don't give a shit. It's for the children, right? God, for the love of God, people, stop putting diapers on everything you see. Holy shit. Sorry about that. Had to get that out of the way. I got news for you today. You are on the Bitcoin and podcast with me, your host, David Bennett, bringing you all the news that you can use about Bitcoin and macro from around the world. And we're going to start in Japan. Japanese crypto bill advances with ETF tax reform path, according to a report. This is written by Ezra Reguera out of Cointelegraph. Japan's lower house reportedly passed a bill that would bring crypto assets under the country's financial instruments framework, potentially opening a path to exchange-traded funds and lower tax treatment for digital assets. The bill would move crypto assets closer to the regulatory treatment of stocks and bonds by subjecting them to stricter trading rules, Bloomberg reported on Thursday. The legislation is expected to take effect next year, but it's still got to go through the upper house. The proposed changes could lower the capital gains tax on crypto assets like Bitcoin from a maximum of 55% to a 20% flat tax rate, in line with stocks and bonds. The tax change is expected to take effect in 2028 if the bill passes. Just keep that in mind. Official records showed that the bill had cleared the Committee on Financial Affairs June the 10th, although the bill tracking page has not yet updated the plenary vote field at the time of writing. The latest parliamentary advance follows months of signals that Japan was preparing to shift crypto from a payment-focused regime into a financial market framework. Let me pause right there. On the surface, this shit sounds good. Hey, it's going from 55% to 20% tax rate. Okay, well, they're still stealing 20% of your money. But I understand the sentiment. You know, hey, it's better than 55. I get that point. But there's another point here entirely, and I was talking about it yesterday. Financialization of Bitcoin. It's like this, it almost seems to me that this is the last thing that they can really do at the governmental level, short of trying to make shit illegal, but that never really works. Drugs are illegal, drugs are everywhere. They tried to, prohibition in the United States in the 30s or whatever. No alcohol allowed. And then Joe Kennedy comes around. If you don't know what I'm talking about, Joe Kennedy is what literally was kind of like, I don't know, lower middle class. I think he might have even been poor as a barn mouse. But he started running whiskey from Canada into the United States. And he made so much money that we now have the Kennedy family. Yes, that Joe Kennedy. So did prohibition work? No. So the only thing that they can really do, the highest gain that these people can get, is to collar Bitcoin with the leash of financialization, to bring it under market regulatory regime type things. And I think that's actually more powerful and certainly more negative than simply trying to make it illegal. All right. So keep that in mind when we start talking about, oh, Japan's they're embracing crypto. No, they're trying to put a collar and leash on it. So please don't trust these people for a second. Continuing in November 2025, media outlet Asahi, I can't pronounce it. They reported that the Financial Services Agency had decided to apply the Financial Instruments and Exchange Act to crypto, including Bitcoin and other tokens handled by local exchanges. FSA materials dated April 2026 said that the proposal would move crypto asset transaction rules from the Payment Services Act to the Financial Instruments and Exchange Act. That's a big deal. That really is. That's a much bigger deal than we think. And I'm not an expert on Japanese law. And I'm going to say it. I don't think I have to be at this point, because I can pretty much bet you that the terms and regulatory landscape of the Payment Services Act is just not brutal enough. We got to move that motherfucker over to the Financial Instruments and Exchange Act. We've got to let way more institutional regulatory control drift into this realm than what would be available to them with the Payment Services Act. I can almost bet you that. The FSA said the bill would treat crypto assets as financial products separate from securities, while introducing disclosure rules, tighter exchange oversight, insider trading restrictions, and of course, stronger penalties for unregistered operators. See how this works? Do you have your collar? Is your dog tag up to date? The proposed framework would also require crypto asset transaction business operators to publish information on the assets they handle, while issuers of certain assets would face disclosure requirements when conducting offerings or secondary distributions. The shift could also open the door to crypto tracking ETFs in Japan, giving local investors a regulated route to digital asset exposure beyond crypto exchanges and listed companies with token holdings, Bloomberg reported. I'm not falling into this trap again. When the election of Trump in 2024, he had gone to Las Vegas or whatever, or was it Tennessee? I can't remember. He went to the Bitcoin conference, said we're getting a strategic Bitcoin bill, and we all said yay, and all of us are left with egg on our face. I don't trust Japan either. I don't think this is good news at this point. I don't think it'll hurt Bitcoin honestly, even if it passes, because one of these days people are going to learn that this model is not designed for us. It's designed for them. Please stop trusting these people. They deserve neither your respect nor your obedience. Bitcoin Magazine, Micah Zimmerman, Morgan Stanley's Bitcoin executive says education not products, is Wall Street's real obstacle. Morgan Stanley's Bitcoin executive. Let's see who this person is. When Morgan Stanley created a firm-wide head of digital asset strategy role in January 2026, it handed the job to Amy Oldenburg, a 26-year veteran of the bank who spent much of her career in emerging markets, trading foreign exchange and equities in places where formal banking infrastructure was either unreliable or altogether absent. That background, she said in a recent interview on the Coin Stories podcast with Natalie Brunell, shapes everything she believes about where Bitcoin is headed. Quote, "Where were the first users of a lot of this?" Oldenburg said, pointing to cross-border and international markets. Regions where people were not rejecting the traditional banking system out of ideology, but because the system had already failed them. She described watching M-Pesa, Safaricom's mobile money service, spread across East Africa in 2007, with women loading cash onto flip phones in villages with no reliable electricity and dirt roads. The parallel to Bitcoin's decentralized value proposition was not lost on her. Morgan Stanley's entry into Bitcoin has been methodical, and Oldenburg explained why. The bank is a global systemically important bank, or G/SIB. So stupid. And unlike BlackRock, an independent asset manager, Morgan Stanley is owned by a bank holding company governed by the Federal Reserve. That distinction meant the firm faced capital treatment requirements and regulatory constraints that independent asset managers did not, forcing it to watch peers roll out crypto products years before it could. The regulatory environment was not the only obstacle. See, Morgan Stanley had built a plan years in advance to launch spot crypto trading on its E-Trade platform, but by 2024, several of the vendors the bank had shortlisted for partnerships had already collapsed, a casualty of the same industry shakeout that took down FTX and a wave of smaller firms. The bank had to rebuild its strategy from the ground up. When the firm finally launched the Morgan Stanley Bitcoin Trust, MSBT, on April the 7th, 2026, it became the first spot Bitcoin ETF issued by a U.S. chartered bank. The debut was the strongest first-day ETF launch in Morgan Stanley's history, taking in over $33.8 million and landing in the top 1% of all ETF debuts by volume, according to Bloomberg senior ETF analyst Eric Balkunis. The fund carries an expense ratio of 0.14%, making it the cheapest Bitcoin ETF in the U.S. The product exists. The challenge now, Oldenburg said, is getting the people inside Morgan Stanley's own wealth machine to actually use it. The firm manages roughly $9.3 trillion in client assets, and in October of 2025, its Global Investment Committee formally recommended a 2 to 4% crypto allocation for moderate to aggressive growth portfolios, describing Bitcoin as a scarce asset comparable to digital gold. Yet advisor uptake has been slow. Oldenburg attributed this directly to an education gap. Many financial advisors still cannot cleanly distinguish Bitcoin from the broader crypto category, let alone explain the structural differences between Bitcoin, Ethereum, and Solana to a client who just wants to know if it belongs in their retirement account. The problem runs in both directions. Clients who come of age watching crypto exchanges collapse understandably associate all digital assets with FTX-era chaos, while advisors with fiduciary responsibility are reluctant to recommend an asset that still moves in lockstep with risk equities rather than as an independent inflation hedge. Quote, "It's not all fitting together yet," Oldenburg said, comparing the current moment to the early days of the BlackBerry, technology where she knew something was there, but the use case had just not crystallized for most people. This sentiment echoes Oldenburg's comments at the Bitcoin conference, where she argued that Bitcoin remains widely misunderstood and that investor education is the key obstacle to broader adoption. She said the firm is training advisors, expanding crypto assets, and believes regulatory progress could eventually make bank-held Bitcoin not out of the question. On the question of what would push Bitcoin toward a more decisive breakout, Oldenburg gave an answer that reflected her experience watching systems under stress. She suggested it may take a crisis, not necessarily a dramatic one, but a slow grind that breaks confidence in traditional financial infrastructure and makes Bitcoin's properties as a decentralized, borderless store of value viscerally clear. She has seen that dynamic play out in emerging markets, in Russia and Ukraine, where people she knew personally lost access to their banking assets overnight. For U.S. banks to hold Bitcoin on their balance sheet, she said the path runs through capital treatment reform. Specifically, the removal of the punitive regulatory burden that makes Bitcoin less efficient to hold than other assets from a balance sheet perspective. The bank is pursuing an OCC digital trust charter that would let Morgan Stanley custody crypto directly, a step that would bring its digital assets ambitions further in-house. That's the end of the article, and I got to say, I've heard a lot worse from people in her positions. She actually seems to get it. She's not talking about, oh, you can have all the products you want, but people still don't trust it because they don't trust what they don't understand, and they don't understand this. You know, we've got an education problem, but we've always had an education problem. And why do you think we have an education problem? Are there just not enough Bitcoin educators out there? I don't think that that's the issue at all. I think we have many of the highest quality educators that are 100% solely focused on Bitcoin. So what's the problem? Well, I don't know. Last night we started bombing Iran again. Strait of Hormuz is closed again, I guess. You got Russia and Ukraine going on. You got us traipsing over to Venezuela and doing shit. Hell, we might even bomb freaking Cuba. And I'm not talking about just the U.S. What I'm getting at is that, again, nobody knows nothing. And everybody is on pins and needles. And it's not just the West, dude. It's not just, citizens in the UK and the United States and Canada, Mexico, and anywhere else in the European Union, Australia. That is what I'm talking about when I talk about the West. It's not just the citizenry of the West. Nobody anywhere in this world has any clue of what the hell is going on right now. Markets, every market that I see looks to me to be completely untradeable. It's not even just the volatility. Nothing makes sense. Things are like, we're bombing the shit out of Iran again, and yet West Texas Intermediate, it rises up on the news, but now it's actually coming back down. And coming back down below $90 a barrel. It was at 95. Yes, that's volatility. I get that. But then we start looking at what the hell's going on. We connect that with what's going on in equity markets. And today is like, I don't know, the pricing day for SpaceX, and tomorrow is the big IPO, and AI is going to take all of our jobs. Inflation is just wicked across the world. And you want people to sit down and learn for themselves about Bitcoin without any structured guidance. And even if and some of us do have structured guidance on how we think about things, and I am not all that good at it, I'll admit it. There are many, 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 many educators out there that have way more structured educational materials and guidelines and paradigms and what pedagogy than I ever would be able to create. And yet, even then, you're asking somebody who's kind of scared to focus. How are you going to get all these people to focus on anything when nobody knows what the hell is going to happen tomorrow? And it's been this way for a lot longer than I think we realize. Everybody's been walking on eggshells and pins and needles, and nobody really knows what's going on. Trust in every legacy institution, whether media or financial and everything in between, is at all-time lows. They're worried about putting food on the table. They're worried about where the hell they're going to get the next job. They're worried about A, B, C, D, and F. We're asking them to look at X, Y, and Z. And I'm not saying that we shouldn't continue to do that. We should. But we shouldn't be shocked and surprised that I got Amy Oldenburg out of frickin' Morgan Stanley saying 17 years after the birth of Bitcoin that we have an education problem. No shit, Sherlock. I wish I had an answer for you. The only answer I can come up with is to continue to do this show. That's my answer for the part that I can do. And I'm going to continue to do that right now. BlackRock and Fidelity are quietly turning Bitcoin ETFs into a two-firm market. Two as in the number two. Yeah, you'll understand here in a second. Helene Braun out of CoinDesk. And she's writing, when U.S. spot Bitcoin exchange traded funds launched in January 2024, investors had more than a dozen funds to choose from. BlackRock, Fidelity, ARK Invest, Bitwise, VanEck, Franklin Templeton, and several others entered what many expected would become a fiercely competitive market. 18 months later, the battle increasingly looks like a two-player race. Data shows that BlackRock's iShares Bitcoin Trust and Fidelity's Wise Origin Bitcoin Fund are doing most of the heavy lifting when it comes to attracting new institutional capital, while smaller funds have become largely irrelevant in determining the direction of the overall market. The trend was evident through the first half of 2026. On January the 14th, Bitcoin ETFs recorded net inflows of $140.6 million according to data from Farside. IBIT alone accounted for $648 million of that total, while FBTC added another 125. Together, the two funds represented more than 90% of all inflows that day. A similar pattern appeared on April the 17th, when total inflows reached $663 million. IBIT brought in $284 million, and Fidelity $163.4. Even during periods of weaker sentiment, the dominance of the two largest funds remained apparent. On May the 1st, total inflows reached $629.8 million, with IBIT contributing $284 of that, and FBTC adding $213 million. Combined, the pair attracted $500 million of that day's total. While the pattern repeated through much of 2026, with IBIT and FBTC frequently accounting for the majority of inflows on the market's largest allocation days, year-to-date net flow data tells a more nuanced story. Grayscale's Bitcoin Mini Trust, for example, has attracted $333 million in net inflows this year, compared with about $83 million for IBIT. As Bitcoin's 29% decline has triggered bouts of selling across ETF sectors, but even so, when investors have broadly added exposure to spot Bitcoin ETFs, BlackRock and Fidelity have consistently captured the largest share of the fresh capital entering the market. The concentration has emerged during a difficult year for Bitcoin and the broader crypto ETF market. Bitcoin is down roughly 29% year to date, a decline that has tested institutional conviction and triggered several waves of redemption. Between mid-May and early June alone, spot Bitcoin ETFs recorded multiple days of heavy outflows. Yeah, dude, we saw it. We don't need to rehash it. But the data highlights a broader shift taking place in the Bitcoin ETF market, in which investors increasingly appear to be concentrating their allocations in the largest and most liquid vehicles. IBIT has emerged as the flagship product of the entire spot Bitcoin ETF sector, regularly posting the largest inflows and often acting as a stabilizing force during periods of market stress. On several days when the broader ETF complex experienced heavy outflows, IBIT either remained positive or saw far smaller redemptions than its competitors. The dominance is not all that surprising. Many of the largest buyers of Bitcoin ETFs are financial advisors, registered investment advisors, hedge funds, family offices, pension consultants, and institutional asset allocators. For those investors, liquidity, trading volume, and issuer reputation often matter as much as the underlying Bitcoin exposure itself. BlackRock manages more than $10 trillion in assets globally and maintains relationships with thousands of wealth management platforms. Fidelity, one of the largest retirement and brokerage providers in the U.S., brings similar advantages through its distribution network and long-standing presence among retail and institutional investors. As a result, many allocators increasingly view IBIT and Fidelity as the default options for gaining Bitcoin exposure. The flip side is that smaller issuers are struggling to remain even relevant. Funds such as Franklin Templeton's and Van Eck and Valkyrie and Wisdom Tree, their products frequently record daily flows measured in single-digit millions of dollars. On many trading days, their contributions are so small that they have little impact on the overall direction of the market. Even funds that were once viewed as major competitors, including Bitwise and ARK, now play a secondary role compared to the industry's two largest products. Earlier this year, Trump Media and Technology Group withdrew plans for their own proposed spot Bitcoin ETF, abandoning an effort to enter the increasingly crowded market that is now dominated by products from BlackRock and Fidelity. The concentration has become particularly noticeable during periods of volatility. When investors buy Bitcoin ETFs aggressively, most of the money flows into BlackRock and Fidelity. When investors sell, the behavior of those two funds often determines whether the sector posts net inflows or net outflows. That dynamic suggests the Bitcoin ETF market is entering a new phase. Oh, thank God. Oh, yay. A new phase. Yay, I'm sure it'll be fine. Rather than a broad competition among a dozen issuers, the industry increasingly resembles a winner-take-most business where scale, liquidity, and distribution drive investor decisions. All right. I don't know what happens with hedge funds when they start basically saying, okay, we're done. I don't know if they unwind their positions back to their investors, or if a fund can actually be bought out by another fund. Now, if it's the latter case, I think what I would expect to see happen over the next, I don't know, the remainder of this year at least, is that all these smaller funds basically get bought up by Fidelity and BlackRock. I don't know if that's the way it works because I don't sit in a suit on Wall Street. But that would seem to be the easiest way for a lot of these people to end up with a lot more customers, a lot more Bitcoin on their balance sheet, and a lot more fees collected. We'll have to see how it goes, but I've been calling this for a while that out of the 12, because there was a total of 12 ETFs that launched basically on the same day, I knew that only 5 of them would even be viable after a couple of years, but I would have not expected there to only be 2. And if you look at Morgan Stanley's play into the ETF, they were doing really well until we started, seeing this downturn. And now the price of the MSBT ETF is actually 100% below everybody's entry point into that ETF. So what was looking like it was going to be a good ETF just got, roundhouse kicked in the side of the head, taken out back of the shed and shot. I don't think it's dead. I think that their timing was bad, but there was no way that they could know. Let's move on. Citigroup to offer tokenized shares of private companies. Oh, God. But only for wealthy and institutional clients. Fuck you, retail. I hate you plebs. This is the block Nagan Avan Nemayo is writing this one. Citigroup is launching a blockchain-based platform that allows its wealthy and institutional clients to trade tokenized shares of private companies in a move the bank hopes will be adopted across Wall Street. The venture is initially open only to foreign investors, the Wall Street Journal reported on Thursday. Citigroup said in its discussions with some of the largest private companies to get involved, those specific names just were not disclosed. Companies are taking longer to go public, and Wall Street has been in a sustained frenzy over the anticipation of the blockbuster stock market debuts of SpaceX, Anthropic, and others. The trend has arguably created demand for institutional access to private equity exposure that traditional markets cannot easily satisfy. The move is a natural extension of Citigroup's multi-year push into tokenization. In 2023, that bank forecast that tokenized security markets could reach up into the $4 trillion mark by 2030, calling tokenization the potential killer use case for blockchain, as the block reported at the time. The same year, Citi launched a pilot of its token services product, converting customer deposits into digital tokens on a private blockchain to enable near instantaneous cross-border transfers. And more recently, Citigroup joined a JP Morgan-backed consortium planning to launch a tokenized deposit network as early as the first half of 2027, reportedly aiming to enable around-the-clock settlement for large global clients. Citi's entry into tokenized private company shares puts it alongside a growing field. Republic announced plans last year to offer blockchain-based tokens that track shares of SpaceX, OpenAI, and Anthropic, with investments starting as low as $50. Well, that is for retail. Robinhood, also retail, moved to offer tokenized shares of OpenAI and SpaceX to European users around the same time, minting tokens on some shit chain. I don't care. However, OpenAI publicly pushed back, clarifying it had not authorized nor endorsed the token. Bernstein analysts called the broader trend an equity tokenization wave, and that was back in July of 2025, citing Robinhood's push as an early signal of institutional momentum building behind the concept. Tokenization isn't going away, guys. That's the end of the article. It's gonna get real hot. It's every distraction you didn't want to see, but it's also dogpiling onto this environment that we find ourselves in, which is, I had a note on Nostr last night. I basically said Twitter's worthless. The global, domestic, and foreign news agencies and media outlets are worthless. Nobody knows what the hell's going on. Twitter is polluted with AI pictures of United States F-35 fighter jets sitting on the ground getting attacked by Iran. I actually kind of call bullshit. I don't think that F-35 fighters in Jordan or the air base that it supposedly got attacked, I just don't see them being that dumb. Now, I could definitely be wrong, but honestly, do you really think that close to Iran, with the intelligence apparati that we have, that we're going to let F-35s in a group of 30 of them, these are like $1 billion planes, group them all together and just sit them outside or in a hangar? I see this is, I don't get it. There's something about this environment that is wholly different than anything that I've ever been used to. If you're younger, if you're a younger member of the audience and you just don't understand what I mean, I wish I could explain it to you easily. But there used to be a time when you could get at least some credible news, and it would sit in your brain, and your brain would analyze the information and say, from everything that you've ever grown up with, this kind of makes sense. And it would settle you. You'd have a feeling of, I kind of know what's going on. The older I got, the more I became to, distrust the information, not all information, but I started going, well, there's some information that is worthwhile and there's a lot of information that's bullshit. But some of the information that was worthwhile was actually worthwhile. And it would, again, it would calm your nerves and settle you down because you kind of knew. You kind of knew what was going on. Here, no such animal exists. And I've never seen this before. Been alive a long time. I've never seen this before. I've never seen a fog of war, a fog of markets, a fog of politics, a fog of media, a fog of social media so thick that you could cut it with a butter knife. That's what I'm talking about. And now they're going to tokenize and digitize the entire market that as of today is unfucking tradable. What could possibly go wrong? We talk about Bitcoin as being the inflation hedge. In fact, I view Bitcoin as inflation proof. But I'm starting to see another aspect of why you want to hold Bitcoin to opening up before my eyes. And that is this market fog. None of these markets make sense anymore. We started bombing the living shit out of Iran. 30-year bond yield actually drops. West Texas Intermediate crude starts to drop. Murban crude drops. Brent North Sea drops. Yet the Hormuz Strait is completely jacked as far as we've been told. Nobody knows nothing. I believe this is the most dangerous time ever. But again, this shining light of Bitcoin is like, at this point, I need a hedge not only against inflation, I need a hedge against the market. Do with that what you will. Meanwhile, we'll run the numbers. CNBC futures and commodities. Brent kind of back up a little bit, not by much though. Looks like a fifth of a point, 93.25. West Texas Intermediate kind of coming back up, 2/3 of a point to the upside, just peaking over $90 a barrel. Natural gas is a hedge, 2.86% to the downside, just over $3 per thousand cubic feet, and gasoline is up 2% to $3.17 a gallon. Murban crude is down 1.5 points to 88.59. Metals are mixed. Palladium is up a quarter, but gold is down almost a full point. Jeez, man, it may break the $4,000 mark, guys. $4,096.05. Somebody check on Peter Schiff. Platinum is down 1 1/3. Silver is down 1 1/4 to 63.92. Copper is up, but only slightly. Ag is fully mixed. Biggest winner is coffee, 2.4% to the upside. The biggest loser is going to be corn, 1.5% to the downside. Live cattle up 1/2, lean hogs up 1/3, feeder cattle up 1 1/3. And here's the indices. And they're doing well because, what better way to get people to buy stocks and bonds and shit as to bomb Iran for the 8th time. I guess we're going to win the war for the 27th time now. I don't know why anybody believes anything that our leaders have ever said about it. I mean, starting with Desert Storm, it's just, what the fuck? I'm actually optimistic. I don't mean to sound negative, but after a while, you just kind of get brain post-toasted and shit. Because look at this, the S&P, the S&P is up, it's only slightly, but the NASDAQ is up 0.7. The Dow is up almost 0.5 point, and the S&P is up 0.7 itself. It's everything that I know about the markets that I've been watching for 8 years suggests that this doesn't make sense. Not really. Not with this much confusion And the only thing that we know is that we're apparently dropping some bombs in Iran again, and we may put boots on the ground on Karg Island in the Strait of Hormuz. That's about as good as it gets. Most of the time, shit like environments like that, people run to cash because they don't know what the hell's going on. So everything is weird, man. It's all weird. And we've got a $62,380 price tag on Bitcoin. I was expecting it to get kind of murdered a little bit because of dropping bombs again. And it didn't. It's actually performing pretty well, which is one of the reasons why I was like going, wait a minute. Maybe Bitcoin's a hedge against the markets, not just inflation. Anyway, it's a $1.25 trillion market cap. We can get 15.3 ounces of our favorite shiny metal rock with our one Bitcoin, of which there are 20,041,232.39 of. Average fees per block are normal. That would be 0.02 BTC taken in fees on a per block basis. Got a busy mempool, almost 50 blocks carrying 112,000 unconfirmed transactions waiting to clear at 5 sats per VByte. Low priority will get you in at 2 sats per VByte. And I expect hash rate has dropped. Not so much. It's still 892 exahashes per second, which I believe is slightly better than it was yesterday. I remain unconcerned about the security of the Bitcoin network. Hash rate, we were fine at 300. If the miners want to shut off their machines because it costs them too much to produce a Bitcoin, don't freak out about it. That's just good business. Reminder, bitcoinandshow.com. bitcoinandshow.com. There you will find brief synopses of what I did in the show earlier the day. You know, if you want to pass it to your friend, it's got a link directly to the episode on Fountain, and it's got a brief write-up. And it would help if you pass these around and say, hey, if you want to know what happened in Bitcoin today, here's my buddy David Bennett's website. Here's the link to the latest show. You can just read on to see if you want to hear more. I also provide what I think is actually becoming much better art from AI. And for you artists out there that are seething at those words, I get it. I understand. I can't afford an artist. This is the only way that I can provide any kind of visual stimulation on something like a website, is to basically learn how to prompt or AI-based art models. Unless you just want to look at nothing but words. And honestly, I don't like that shit. Okay, from yesterday's episode of Bitcoin and, it was entitled Kalshi Intelligence Agency. Short form is KIA, which is also known as Killed in Action. Yesterday's episode of Bitcoin and, Nick Dose gave me 230 sats and he says, cheers. And then there's Jay with another 2,100 sats that says, thank you, sir. And then he comes back and he gives me another 210 sats. And he says this: being humble towards yourself is just something that popped out of my head. I guess it's the natural progression from God to others to yourself. And the idea that humility can be practiced at all levels equally. If the distance between you and God is the ego, closing that gap is humility. And as important as it is to be humble externally, knowing yourself as you are and not lying to yourself about yourself are prerequisite. Which sounds nice, but really, I'm in the same boat as you. I don't know what it means either. Well, Jay, I'd rather be in a boat with you than most people that I know. You know, at least you're fighting the same battle that we are. Oh, you must humble yourself before God. Yeah, really? You got an instruction sheet on that? Again, I go back to the original, like this was a few episodes ago, where I was like, I need to figure out a way to actually do that, and it would be nice to get a report back, like a bottle rocket report. You fire the bottle rocket off and you don't know where the hell it went, and then it pops and you go, oh, there, I see the little puff of smoke. It's a report, right? Something to know. Yeah, you did it right. You're now functionally humbling yourself before God. That doesn't exist. I can't find it in the Bible. I'm not going to ask AI about it, for God's. I don't need theology from a freaking machine. But, other people may know, but I've asked, again, I've said this before, I've asked priests. I mean, full-blown priests. I'm not talking like mega church, like what's the Olson guy. I don't know. I want somebody who was trained in seminary, like at the Vatican. I want to be able to ask like a full-blown bishop, hey, bishop, I'd like to humble myself before God. How do I do that? Exactly. Do you have an instruction set? Is there a passage in the Bible? Is there a psalm? Is there anything that says how to do the thing you keep asking me and telling me I should do? Because if you tell me I need to get in a car and go to the store and get milk, I know how to do that. But when you say you must humble yourself before God and then walk away, you're kind of leaving me in nothing but blackness. And it's not helpful. I'm just saying. So at least me and Jay are like trying to, I don't know, figure this shit out for ourselves. But I'm still fascinated with what he said about being humble to yourself. And that's going to be something I'm going to be thinking about for a long time. Thank you, Jay. I appreciate the sats. I appreciate the sentiment, and I appreciate you turning over that gear in my head. Noster Gang with a short row of sticks says, thank you. You're welcome. Vermilion with 100 says, I have the best health insurance that my company offers, and it literally cost me half of my paycheck, and I still have an $8,000 deductible. Vermilion, I don't know if you're in the United States or not. If you are, just check out Crowd Health. I mean, they're not a sponsor. I've interviewed their CEO once. I do not know the man personally. Me and him have never had a beer, right? I do not personally use Crowd Health, but it's something that I'm looking at because this is out of control. That's the weather report. Welcome to part 2 of the news that you can use. The IMF urges Nepal monitor crypto as usage rises despite the ban. So the IMF is wetting their diapers again. Can't imagine why. Let's find out more from Vismaya V. She's writing this one for Decrypt. Nepal banned crypto, but crypto did not leave Nepal. In a report released Tuesday, the International Monetary Fund flagged growing crypto adoption in Nepal despite a legal ban and urged authorities to monitor the sector closely to protect financial stability and curb illicit flows. Quote, flows of stablecoin and unbacked crypto assets grew markedly between 2019 and 2024, although adoption remains modest relative to peers despite legal prohibition on crypto transactions. The IMF wrote, adding that crypto adoption in Nepal warrants close monitoring. Ooh, they're terrified. The findings came in the fund's 2026 Article 4 consultation, published as its executive board completed the 7th and final review under Nepal's extended credit facility on June the 5th. Now, Nepal banned all crypto transactions in 2021, with the central bank declaring trading, mining, and related activities as illegal. Crypto inflows were negligible in 2020, but then topped $2.6 billion in 2021, briefly exceeding 13% of the nation's GDP, according to IMF staff calculations. Volumes fell to roughly 4% of GDP by 2023 before climbing back toward 8% in 2024, with stablecoins making up the larger and growing share. On cross-border flows, the fund pegged Nepal at around 5% of GDP in early 2025, ahead of Bangladesh and Myanmar, but far behind Vietnam at roughly 26%. The IMF wants a regulatory framework aligned with international standards, saying, quote, it would help safeguard financial stability and integrity and consumer protection while limiting circumvention of capital controls or large-scale deposit outflows, end quote. The IMF also pushed Nepal to finish a Financial Action Task Force action plan and exit the watchdog's gray list. Mushir Ahmed, founder and managing director of FinStep Asia, told Decrypt the ban versus regulate debate starts with a category error. Quote, the technology is not regulated. The use cases may be regulated, Ahmed said, adding that countries where crypto is banned or heavily restricted are still opening the door to tokenization use cases involving real-world assets and TradFi. Ahmed said the use case that persist, such as trading and remittance, are exactly the ones worth regulating. Quote, on the trading front, it does make sense to bring in regulations for consumers and investor protection, he said, adding that regulators must balance oversight of cross-border payment rails against long-standing concerns around monetary risks and capital controls. The IMF has spent years pressing governments to rein in crypto, most visibly El Salvador, which scaled back its Bitcoin experiment in December of 2024 to land a $1.4 billion fund facility. The fund insists the buying stopped, with a spokesperson previously telling Decrypt that, quote, the total amount of government-owned Bitcoin has not increased and that the increase in the Bitcoin Reserve Fund corresponds to movement across government wallets, end quote. El Salvador's President Nayib Bukele says otherwise, as he claimed the nation still buys 1 Bitcoin per day and tweeted, quote, no, it's not stopping. It won't stop now, and it won't stop in the future, end quote. Quote, I don't think El Salvador experiments per se has any significant impact on either side, Ahmed said, adding that while it put the country on the map for virtual assets and drew crypto capital, limited adoption showed Bitcoin is used more as an asset than money. The real traction, he said, is the payment rails, quote, especially the stablecoin sandwich, which has gained significant traction. IMF's crypto warning lands as Nepal rebuilds from September's Gen Z protests, which toppled the Ali government and installed an interim administration under former Chief Justice Sushila Karki. The unrest erupted after the government banned 26 social media platforms on September the 4th, drawing young Nepalis into the streets ahead of one of the deadliest crackdowns in years. The ban backfired in a familiar way, with tens of thousands of Nepalis downloading Jack Dorsey's decentralized messaging app built on Nostr called BitChat, which runs over Bluetooth and mesh networks without internet nor accounts. China later ordered the app pulled from its app store over rules of service capable of social mobilization. The fund said that it will keep engaging Nepal through post-financing assessment and Article 4 consultations with crypto oversight now on the agenda. So, I mean, my God almighty, Nepal is so big and so large and has such a powerful military and economy and trading negotiation leverage that the IMF, oh, wait a minute, no, Nepal has none of that. And the IMF is rabidly focused on this very small country. Can't let Nepal, sandwiched what, in between, was it Mongolia and India? I don't know. I can't remember exactly where the hell Nepal is. It's landlocked. It's a tiny country. It's not that big. But it's like El Salvador. Here comes the IMF. Oh my God, whatever shall we do? Whatever shall we do? It's all so boring at this point when it comes to the IMF. Let's move on. This one is way more important to us than the IMF and they're filling their diapers with yesterday's applesauce. Community Bank Group launches a new ad campaign targeting the Clarity Act stablecoin reward language. Now listen carefully to this one. Sarah Wynn, writing from the block. A key group that is representing small to mid-sized community banks plans to launch a new advertisement warning of risks in digital assets, reigniting an ongoing fight between banks and the cryptocurrency industry over language within sweeping digital asset legislation. The Independent Community Bankers of America unveiled the campaign and ad on Thursday, pushing back against compromise language in the Clarity Act that would govern the treatment of stablecoin rewards. Quote, "Community banks are the backbone of Main Street," said ICBA President and CEO Rebecca Romero Rainey in a statement. Quote, "Americans care about their local economies, but most are unaware of the risks of giving crypto conglomerates a free pass," end quote. Over the past year, the Senate has been working on the Clarity Act. Yes, and we know what it is, so I won't read you that. Banks, including ICBA, have said they are concerned with rewards that will draw deposits away from traditional banks, while crypto firms say that restricting those rewards would hamper innovation. After months of consternation, bipartisan language was adopted in the Senate Banking Committee that blocks certain firms from paying any form of interest for just holding stablecoin or in any manner economically or functionally equivalent to the payment of interest or yield on an interest-bearing bank deposit. But it allows rewards based on certain activities. In the new ad, the ICBA criticizes the crypto industry for getting a free pass. Quote, "American families don't want experiments with their money. They want jobs, growth, and available credit. When crypto gets a free pass, communities pay the price," end quote. The Digital Chamber CEO, Cody Carbone, hold on, I got to get this right. Digital Chamber CEO Cody Carbone criticized ICBA's new campaign. Quote, "ICBA's campaign isn't about protecting Main Street. It's about shielding an outdated model from competition," he said. "The free pass claim is flatly false. Our industry is fighting for clear federal rules through the Clarity Act, while ICBA is fighting to keep Americans locked out of innovation." Well, I agree a hell of a lot more with Carbone than I do with this I don't know, whatever her name was, of the Independent Community Bankers of America. You know, somebody said to me the other day, it's actually a couple of weeks ago, that banks should have been more up in arms about money markets than they should be about stuff like Bitcoin or stablecoin or anything and rewards and all that shit. Because money markets did suck a lot of deposits away from traditional banks. And yet, there was really not any fight put up. But now they're running an ad. They actually are getting, like, I wish that the block would have said, is it on TV? Is it on radio? Is it on all formats? I mean, where is this thing going to air at? What regions of the country? I mean, this is basically in the United States, so is it predominantly on the East Coast, West Coast? Is it all over? You know, we don't know. However, that said, it is still an advertisement. It's like, all right, what do we got in our bag of tricks? I don't know. Maybe we can advertise on the Tonight Show. I mean, that's what they got. That's what they got. But the notion of saying that it's going to pull money out of community banks and therefore hurt communities, again, I ask you, where were you when hedge funds were launched? Or not hedge funds, but money markets. Where were you when all manner of products that have been hammering community banks for decades, where were you then when those products were coming out? It's not like all of a sudden community banks are on the ropes. Oh, hell no. Community banks have been on the ropes for decades. And a lot of that competition is coming from where? You might go, well, you just said money markets. No, man. JP Morgan. Ever since the installation of, or the integration of the internet into widespread human communications, Fidelity, Morgan Stanley, huge, massive banks that also represent international conglomerate interests were able to email you something that said, hey, we'll deposit $100 into your brand new checking account if you sign up today. Where were the community banks then? Why now? Why stablecoin rewards? They've been picked clean. They've been picked over like dozens of times over the past 25 years minimum by the likes of Jamie Dimon himself. And yet I heard no bitching and moaning then. Why now? Why this? Freaking ridiculous. And here's something else that's absolutely ridiculous. Nakamoto. They sold 600 Bitcoin. This is Bitcoin Magazine, which is underneath the umbrella of Nakamoto, and Micah Zimmerman is writing for them. And he says, Nakamoto announced today a set of capital structure initiatives that include a $45 million debt reduction, a loan refinancing with extended maturities, and a $25 million share repurchase authorization. They are trying to save their bacon because Nakamoto has been like an asteroid plummeting to Earth. It's the amount of wealth that David Bailey has vaporized is beyond eye-watering. It's like it should shake the foundations of people's humanity to watch this guy light a pile of cash on fire like he was in a fucking Batman movie. I've never seen this level of just pure bullshit. Shares of Naka briefly climbed 20% at the time of writing anyway. And the company retired $45 million in outstanding debt through a repayment of a portion of its loan with Payward Interactive. Nakamoto funded the repayment by selling approximately 600 Bitcoin and Bitcoin-related derivative positions, which generated approximately $48 million in net proceeds. The transaction leaves Nakamoto with only 4,467 Bitcoin on its balance sheet. The whole point of Nakamoto was to have Bitcoin as a treasury asset. And here we're just selling off chunks at 600 at a time. Is it possible that David Bailey got in too late? Yes, he did, but it's more than that. I hate to say it, it's either incompetence or it's malfeasance. And I don't know which it is. Hell, it might even be both. That he couldn't even competently figure out a way to scam people. I don't know. I'm sick of this dude. You know, for a long time, Bitcoin Magazine was running just fine. The Bitcoin Conference, which is also under the umbrella of Nakamoto now, was running just fine. You know, there was a day, like just 6 months ago, I'd open up the website for Bitcoin Magazine, and there Shinobi was writing for him, and Juan Galt was writing for him, and Micah Zimmerman was writing for him. But then you had like 4 other, actually more like 6 other people sending in stories to Bitcoin Magazine. The only person left is Micah Zimmerman. I mean, yesterday I think I read one story from BM from Juan Galt. I hadn't seen him in weeks doing anything for Bitcoin Magazine, but every single day I see at least 80% of stories from Bitcoin Magazine are written by Micah Zimmerman. I don't have any problem with Micah Zimmerman. I don't. What I'm saying is, the magazine used to be robust, and ever since David Bailey did this and start schmoozing with the people in Washington, the quality of the products are just in decline. Is that what you expected to have happen, Mr. Bailey? Anyway, they've got a new loan term sheet and the stock price went up and now it's kind of back down. There's no saving Nakamoto. There's no amount of Bitcoin you can sell. You might as well just go ahead and cut loose the other 4,400 Bitcoin that you got and just rip the Band-Aid off, because watching this slow bleed that is the umbrella corporation of a product, in this case Bitcoin Magazine, that I have felt kind of a part of for, God, how long have I been in this thing? Since 2015. It's sad to see this product go down the tubes like this because of greed and, I don't know, some kind of need for power is what it feels like. But there's no saving Nakamoto. I mean, it's sad. I wish there was a way, but honestly, do you want this thing creeping around? I sure as shit don't. Because this is like the attitude of shit we were trying to get rid of in 2017 with all the IPOs and all the altcoin releases and all the airdrops and all the forks and all the bullshit. Was crap like this. Teenage crypto scammers stole $13 million and splurged on private jets and, of course, a Lamborghini. That's out of Cointelegraph. But somehow or another, the energy of this stupidity, of this teenager, effectively stealing $13 million and decides to do what with it? Spend it on stupid shit, is the same energy I'm getting out of David Bailey, and I don't understand why. He's a grown man. At least this fucking piece of shit has at least the excuse to be 17 years old. No, I'm sorry, 19-year-old Trenton Richard Johnson. Yeah, Johnston. His middle name is Dick. Hi, my name's Dick Johnston. As if it couldn't be a better porn name. Anyway, he scammed himself into an exotic lifestyle because he thought that was important. Is David Bailey scamming himself into a lifestyles of the rich and powerful because he thinks it's important? Do we even know what is important anymore? Do we even know what it means to live life? Oh my God, your 401k doesn't have $4 million in it and you're only 33. You should be terrified. Really? Is that the way we should be thinking? Oh my God, how dare you? How dare you have a problem with the fact that you've got the most expensive health insurance that your company can offer, and you still are paying half of your paycheck for it and getting an $8,000 deductible before the shit even kicks in? How dare you turn your nose up at that? You know, my mom, when I was a kid, we didn't have health insurance because it didn't exist. You had a baby, you went to the hospital. They gave you a bill for about $700, you paid it. You went to the doctor, you gave him $10. When you finished getting whatever, your polio shot, whatever it was, or your checkup. You went to a dentist, you got a cavity, you filled it. Yeah, it was $100. But now you got dental insurance and you pay, like, let's say $100 a month for it. You get a cavity filled once a year. They charge your insurance company $500 and you get a bill for what? $100. The math doesn't work on any of this anymore. You know, the only people that I think got it right are the Amish, the Mennonites, the Quakers, the Shakers. I don't know if any of those guys exist. You get my drift. And it doesn't mean that I want to go to Pennsylvania Dutch country and become Amish. That's not what I'm getting at. But at least these people had a sense that, you know what? You can have all of that. Your, skyscrapers and your traffic and traffic lights. We're going to basically be out in full view of beauty all the time. We're going to work in beauty. We're going to sleep in beauty. We're going to have our children in beauty. We're going to live and grow old and die in beauty, doing things we love, things we can touch. Yeah, I really do. I really believe that humanity is coming to a reckoning. I kind of felt it when I was looking at Twitter and the news media trying to pull some thread of sanity out of just what's going on in the Strait of Hormuz and Iran. Just that, nothing else. Just that. And I wasn't disillusioned and I didn't get depressed. I know I'm optimistic. I really am. I think the reckoning is coming, and you would go, why does that make you optimistic? Because the chaff needs to be separated from the wheat. That's what I think. What does it look like when it comes? I don't know. Will I be alive when it comes? I don't know. I know it needs to happen, and I think it's going to. I just don't know what it looks like when it does. But I had this weird sinking feeling when I was trying to figure out this whole Iran thing, just trying to get a shred of anything that made logical sense. And I was like, I think we're due for a reckoning. I really think at this point we've crossed the Rubicon into lands unknown where nothing makes sense, and we should probably go back. You want to live in the Stone Age without water? No. Dude, I'm trying to think. I was about to say, look at the 1950s. Wasn't great, but I think it was better than it is now. It does. And I also don't want to be thought of as a Luddite either. Like, I like having a cell phone. I like being able to look stuff up. I actually have a great deal of utility gained out of using artificial intelligence. You got to know how to use it. If you're, a naive user of AI, it's no wonder that you go, this is worthless, because you really have to learn how to use it and use it well. I like it. I like the fact that there are airplanes flying in the air. I think it's interesting that we can take hundreds of tons of steel and put it into the air. I think it's a marvel of the human spirit. Well, I'd love to get back to that shit. Putting a C-130 in the air, the amount of calculations that had to have been done over the period of decades and decades and decades to figure out how to do that is like building a cathedral back in the 12th, 13th, 14th, 15th centuries. These are huge projects. And brilliant people would spend their entire lives trying to figure out how to do that. How do you build the architecture of a flying buttress to make sure the walls of this cathedral don't fall down without a computer to do the math? In the 12th century, without Newton to give you like some semblance of calculus. We're, as a species, awesome. And we have allowed ourselves to become not only apathetic, but literally distracted by every single thing in front of us. We don't give a shit about the soil anymore. That's getting fucked up real fast by conventional farming. And I don't even want to get into that because that'll send me down a rabbit hole rant, and I don't want to do that. And it's like, I don't even mind extracting oil. I literally don't mind extracting oil. But watching people like just get bent out of shape about, oh my God, the CO2. And it has no training in ecological science what fucking soever. Writing books and becoming rich and being able to get on TV like Al Gore without literally any goddamn training whatsoever. He was the first billionaire greenie. And he's full of shit because he was able to wave his hands in the air and distract people, good people, and confuse them into believing what he wanted them to believe so that they would buy his book and go to his movie and do his shit and have, give him donations, whatever. It's infuriating. It really is infuriating to watch this shit happen. But this is where we are. And I really believe Bitcoin is a hedge against a lot of this. But the other side of that story is long time preference. You have to have a long time preference. This instant gratification shit's got to go. It's got to go. It's not. I understand that part, but it's got to go. And there's so many other things that I see that they're just is. You ever it's the feeling that things are wrong. You know, like watching a Star Trek episode. Let's finish with this one. There's several Star Trek episodes where one character of the crew of the Enterprise, and it doesn't matter. You'd be like Next Generation, original series, or what. There'll be like at least one episode where one crew member somehow just feels that something's wrong. Something's not right. Nobody else gets it. But because of, I don't know, some kind of quantum accident or they're psychic or something like that, they have this extra sense that something's wrong. And it turns out they're in the, like, have accidentally like got enveloped in a warp bubble or something like that. And is now in a completely, entirely different existence or a different timeline or somewhere where they're not supposed to be. And they do everything they can to convince everybody else on the Enterprise that this is wrong. And I think that that's where many Bitcoiners find themselves and have found themselves for years. And the landscape external to Bitcoiners has only gotten worse. Again, I am not being negative here. I'm just calling balls and strikes. If you thought it was hard to educate somebody about Bitcoin 10 years ago, it's now harder. That's the point. It's harder now to educate somebody about Bitcoin than it ever has been. Let's chew on that for a while, and I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.